Hello, everyone, and welcome back to the TraderLion podcast. I'm your host, Richard Moglen. Joining us today is Eric Krull, hedge fund manager and founder of Krull Capital Management, as well as one of the co-authors of the excellent The Lifecycle Trade book, which I really enjoyed, a study of how to win at trading IPOs and super growth stocks. Eric, thank you so much for taking the time and welcome.
Richard, it's great to be here, and thanks for having me on your podcast.
Yeah, it's my pleasure, and I'm really looking forward to diving deep into your process today, as well as later on during the IPO Masterclass, which we'll be doing in February, really getting into the nitty-gritty about how you trade, as well as the other co-authors. And is there anything like you're really looking forward to about the Masterclass that you think you should share with everybody watching?
I'm really looking forward to meeting the students who are taking the class. It's been my experience that people who've read the book always have insights that they catch from the book and great questions. And I'm really looking forward to meeting some people and answering their questions and finding out how they've had success with IPOs, or maybe how they want to get better at trading IPOs.
Yeah, perfect. I'm really looking forward to it. And if you're curious about that, the link will be popping up right now, as well as down below in the description. And now, kind of getting into your background a little bit, I'd love to hear, Eric, kind of how you first got interested in the markets and started your trading.
I first got interested in the markets back when I was in like 8th grade, 13 years old. I did a term paper on the stock market. I used to hear my dad and my uncles talking about stocks, and I always wondered what that was. And I used to see the papers have all these big stock tables. And so I would look at those things, and I got interested, did the term paper, learned a little bit more. And then that kind of planted a seed that later on, when I was in college, I started taking courses in finance and investments, especially when I was getting my MBA. And that really lit the fire. And it just got me more interested in learning how to trade. And I've always looked at it like I knew it was something you had to do in order to set yourself up for retirement and investing. And it was just something that just always appealed to me.
Yeah, you kind of caught the bug.
Caught the bug,
Yeah, for sure. And I'd love to hear, were there any kind of books or mentors or other resources that really kind of helped you out in developing your process and kind of, establishing the way you trade today?
Certainly, the mentors specifically would be like William O'Neill and the other portfolio managers that taught the many seminars I went to from Investors Business Daily. The How to Make Money in Stocks book was a big influence for me. Especially the bear market of 2000 cured me of my buy and hold investing theories that I learned at the University of Chicago. When the stock market kept going down and down and down, and holding didn't seem like the most prudent thing to do, I sold my. At that time, I was investing mostly in index funds, and I sold those and said I better really start digging deep. And I dusted off a copy of How to Make Money in Stocks that I had never finished, and read that. It was edition one of the early ones, and it really caught the bug. When I finished that book, it just seemed to sync with the way I was thinking. It just really clicked. And then I went to one of the seminars they had in New York in 2002, and met some people there that I stayed friends with for a long time, and really just dove in from there.
Yeah, great. And have there been any kind of very kind of key aha moments or turning points in how you've traded? Maybe it was a trade that kind of changed your point of view. It sounds like the 2000 bear market definitely changed how you thought about investing and trading. But were there any kind of key things that stood out that after this trade, I'm really going to pursue this a little bit more, and that kind of changed your performance and how you traded?
It helped that when I first started doing some investing in 2002, the market had finally turned around from the bear, and I started making some money quickly in the what I'll call the new bull, but it really wasn't mature yet. And I made some gains in the fall of 2002, and then by January, February of 2003, I'd given them back. And so that experience of having some really good gains and giving them mostly back really changed how I studied the system. And that's when I went for the seminar and learned that you got to obey all the rules, the buy rules, the sell rules. And so in 2003, when the new bull started, I had much better success in holding on to gains, and some early trades in 2003. It's like I picked them right, And some of the guys I met in the New York conference had suggested a few other stocks that I wasn't watching. And that made a big difference. I learned, don't try to do it all on your own. You don't always have the best ideas. There were some stocks at the time, the new Chinese gaming stocks, NetEase, Sina, and Sohu were not on my radar whatsoever. And they were watching those stocks. And I decided to take a nibble of each of those stocks. And sure enough, those just took off. And it's like, wow, you can really learn a lot from other people. You don't always have the best screening methods. And that made a big difference too, is listening to other people. And then joining a meetup group. The one that Kurt Dale started in Naperville had a big influence on me. Not only did I meet Kurt, made a great friend. Eventually, that's where I also met and got to know Kathy Donnelly and also Eve Bobach, all through that Naperville meetup, and that established lifelong friendships. And I would say they're my mentors too. I've learned a lot from both of them, three of them.
Yeah, and you've probably told this story, a million times, but I'd love to hear kind of how the initial study of IPOs came about, and then how you ultimately turned this into a book, which I've really enjoyed. I think it's presented excellently, and some really kind of interesting stats that you guys came out with. A favorite of mine, I think, is the one that talks about the percentage of stocks that undercut that first day low. I think that's a really key one. But I'd love to hear the story around the study and how that came to be.
Well, I had been trying to trade some stocks after their IPOs and didn't have very good success. One trade in particular, Baidu, I've told in the meetup a few times, was I bought the stock on day one, and I had written down on a piece of paper that if this stock doubles, and I'd written on a price I was going to sell it at, was ready to go. So I went in with a large position for me at the time, and I bought the stock just minutes after it started trading. There was a lot of hype. From the offer price the night before to the price that it came out on the market, I believe it almost doubled. And I went in, and within 30 seconds, I was down a lot of money. And it was shocking. And I just felt like the biggest fool. And it was one of those times where you're doing that like trader's prayer, which is like, dear God, just bring me back to break even. I promise I won't do this again.
Yeah.
And so I looked at the screen, and I put in a stop order to sell just above where I bought it. Something, if I could, at least I can break even and maybe make a little bit of money. And I was so rattled, I went for a run, and I ran about 4 miles. I came back maybe close to like 35, 40 minutes later. And I sat down, and I see my stop order had executed, and I was thrilled that I did not have a big loss. And some of my friends pointed out, well, you didn't protect yourself for the downside. You only got yourself out if it went up.
Yeah.
And like, yeah, I was pretty upset and rattled. I guess I didn't think about that. And then only to see that Baidu not only went up above where I sold it, it did double, and it hit that price that was written down on that post-it note. And I could have made a lot of money that day, and I didn't. So that was probably one big reason about IPOs that I wanted to study it, because I didn't understand what happened that day. And then future IPOs like Google, I missed potential good gains in Google. And only after I went to a seminar with IBD, it's like, oh, look at Google. It had a nice IPO base, and it broke out. You could have bought it here, and you could have done this. It's like, yeah, I missed that. I don't know how I missed that, but I did. And so then commiserating with both Kathy and Eve over lunch one time, we talked about, we all wanted to study IPOs. And Eve said, let's kick off a study. And so we did. And then we started working on it. And then a few months later, the study had stalled a little bit. And Kurt saw me working on it, and he saw me grumbling about how much work I was in, trouble I was having. And he saw it, and he said, why don't you do this? Why don't you do that? And I said, you want to be part of the group? And he joined. And so we started working on it. And we had fits and starts. And I decided one time, organize, let's do a getaway weekend where we're all going to work on this together. And we went to this lake house that my brother had, and we kind of hunkered down for 3 days, and we made some major breakthroughs and launched a good plan for the study. And it took us maybe 2 to 3 years to do the study that ultimately led to the book, which the book itself took another year. And so that's how we did it. It was 4 people who all wanted to get better at trading IPOs, and friends, and we all wanted to work together.
Yeah, very cool. And ultimately, how many IPOs did you study, and like how far back did you go to analyze different IPOs?
We first started with, I think it was maybe 60 to 100 that we were going to study in detail, including models for buy rules and sell rules. And we started to do it by hand at first. And we assigned simply, each of us would take one or two, and we would each study them based on criteria. And we tried to do it by hand. And we brought those stocks together and we looked at the charts, and we realized that each of us would have done slightly different than even using the definitions we had come up with. So I said, why don't we use TradeStation and program it so that it's all consistent? And we did that. And that took a while to do, but then we did like 60 stocks. We said, well, this is not enough. We just looking at buy rules and sell rules for on 60 stocks is really an inadequate sample size, right? So we said, well, why don't we look at just how they all behave from the day they IPO until that current date? And I wrote a program in TradeStation, and we went back and we decided to go back to 1982, and we ran every stock that had IPO'd from 1982 to 2017, and it was over 3,000 stocks. And we checked data for consistency between MarketSmith and TradeStation, and stocks that didn't have the same IPO date were dropped from the study, because if you're measuring everything from the day one close, you better have the exact same date.
Right.
And that got it down to about 2160 or something, like almost 2,200 stocks. And we ran that through and measured all the criteria that we wanted. And so it was really about 2,200 IPOs over a 25-year period.
Yeah, and for you, what were kind of the biggest takeaways after doing this study? What were kind of the most impactful things that you discovered that you kind of incorporate into your trading today?
The first thing is never trade day one. Don't pull an Eric and try to trade any stock, including Baidu, on day one. That came out loud and clear. There's no reason to trade day one. And the other thing is, and the data supports why. The other thing is, the vast majority of IPOs, like 72% of them, don't trade enough volume to be of institutional quality. So you're looking at a small universe of only 28% of IPOs ever get to be like institutional grade. And one of the things I've learned from Can Slim and from Nicholas Darvis and others is you want to trade stocks that have significant volume. And institutions drive the growth of a stock. Super growth stocks don't just come up on little tiny baby stocks that no one's trading. It has to have long-term potential, and institutions and mutual funds and hedge funds, and they're the ones who drive it. So you have to trade big volume stocks, to trade big volume, and also be very picky. You have to look for patterns. IPOs all have patterns, and the book shows that there's significant groupings of stocks that fall into different categories, and you can spot them. Sometimes it's a judgment call, but the rules to trade them are pretty much the same anyway. So whether you categorize it one way or another doesn't matter. It matters the rules you follow.
Yeah, and reading the book and talking with Kathy and a few of the other authors, it seems like 20 million in dollar volume a day is kind of the minimum that you guys typically use to scan and try to find new ideas. Is that right?
That's exactly it. $20 million volume a day is the minimum. I'd like to look for more in many cases, but anything below that, it's not even makes my list.
Yeah, perfect. And taking a step back, just kind of interested in how you guys did the study in the first place. Do you have any tips or advice for people who want to do their own study? Maybe it's not about IPOs, but maybe it's about stocks that showed up like a cup and handle, or a double bottom, or came out after a bear market. Do you have any advice for doing a study in general about some aspect of trading?
Yeah, I do. The first is you try to clearly define as best you can what you're going to study, because otherwise the study can then you would be surprised how many different directions it could branch off. You're going this way, then you're going that way, and you have to put a fence around it. Otherwise, you'll never finish. The second thing is you can't believe how much you'll learn by doing it on your own. It's one thing to read something in a book or an article or hear from a friend or see on TV, but when you yourself look at it, it just sticks better.
Hmm.
It becomes part of the way you think. If you study long enough and really dig deep enough and are serious about it, it just becomes just such a great tool and tools that you can use. I'd highly recommend people, they hear something and they just go test it. I can't believe how many times I've tested something and sure enough, they're right. But there's even probably more times where I test something and it's like, no, that's not exactly right. It doesn't fit. And then you know why. And sometimes you find it looks like it doesn't fit. Then if you go back to the person who first said it and you ask questions, you might find out, oh, they had a different criteria, or this doesn't fit. And you just learn a lot more things. I'll give an example. In William O'Neill's books, he talks about the follow-through day system. And many of the books say that about 3/4 of the follow-through days are successful. The question became, I wanted to study it because my personal experience was it didn't seem like that. It seemed like there were a lot less follow-through days that worked.
Hmm.
You start with the question, well, what does he mean by successful? Because the book doesn't really say.
Hmm.
Because the way I analyzed them, it came out as probably only about 1/3 of them were successful. I've got to know some of the people at Investors Business Daily well enough that I could ask some questions, and some of the portfolio managers. And when you dig, you eventually find out that if you include the rallies that give you enough time to get out with just a small loss, those are the ones that get you up to 75%, because it's about 45% of rallies produce what I call small losses or gains, or their slogs. And small losses or gains about 40% of the rallies. And you
Hmm.
get these 33% that are money makers, or what I call life changers. And you add in the 40% of the slogs, and now you get about 3/4 of the rallies after a follow through day fit that criteria. But you don't have good money making opportunities 75% of the time. It's more like 33% of the time.
And
So
yeah, go ahead.
doing your own study, if I didn't do my own study, I never would have found that out.
Yeah. And doing that study on fall through days, were there any kind of qualifying factors that, led to a better hit rate for fall through days, like, needing a certain breadth amount or something like that? Or you didn't really look into that too much?
I looked a lot at that.
Hmm.
And surprisingly, um, I thought maybe the volume on the follow through day, the bigger the volume, the better the chance of success. No. I looked at where this follow through day finished the closing price above certain moving averages, like the 50 or the 20, the 200 day, or above the 21. That didn't have much effect. I thought it had maybe something to do with maybe how long the stocks were in a correction. And I'll just cut through the chase, but I studied a lot of different things. But what I found out was more that how the stocks did after the follow through day in the first 20 days determined a lot about its success or failure. For example, if it undercut the low of the follow through day, that was almost and closed below,
Hmm.
that was almost a guarantee that rally was going to fail. I also found out that if you had a follow through day and within the first 25 days, you had additional days that qualified as follow through days, that was a big determinant of one that was going to succeed. And then if you looked at the actual amount the index gained from the day of the follow through day, from that close to where it was going in the first 20 to 25 days, that determined how successful it might be. And no surprise, if you got additional follow through days and you posted like 5 to 7% of gains in the first 25 days, those were more likely to succeed. It was kind of like, if it's working, it's a good one. And
Yeah.
yeah, big surprise, right? But if you got a lot of chop, and if you got professional distribution in the first couple of days after a follow through day, it was probably going to be a loser. It was probably not going to be a good one.
Yeah, it makes sense. So you really want to see a lot of power after that fall through day. You just want to see it explode and work right away. That makes sense.
Yeah, you want
Yeah.
to see it continue to work. You don't want to see professional distribution right away. And it really didn't matter the volume on the first day, or the percent gain on the first day. That was not a big determinant of success.
Yeah. And you mentioned professional distribution. Do you have like a criteria for that, or is that just
Oh
kind of,
yeah,
yeah.
professional distribution would be the market closes lower by at least 0.2%, in heavier volume than the prior day. That's a day of professional distribution.
Yeah, perfect. And coming back to kind of the current environment, we're maybe at a potential turning point where we're at the we're rallying right now. Obviously, we're recording this just so everybody knows Thursday. I'm not quite sure the date here, the 26th. So obviously we'll have to see what happens. But given your experience in trading, after the 2000 bear market as well as after the 2008 bear market, what kind of things do you look for to determine, yeah, the market has actually fully bottomed? It's time to get a little bit more aggressive. What do you kind of use as a factor to say, hey, now it's time to increase exposure again?
Well, in addition to what we just talked about with like what I would call a follow through day, I also use another market trend system to help me determine that, which I can share a screen in a few minutes on that. But I start to look at how are leading stocks, how are stocks acting, the ones with good earnings and good sales. Can a stock make some gains, break out of a consolidation and hold those gains and go higher? Really, in the last year, we've had very few opportunities where stocks would form good consolidations, good bases, break out from cups and handles or flat bases, and then move up out of those bases in heavy volume and keep going. Many times they would go out and then come back just a few days later. Maybe they rise for 3 days and they erase it all on the fourth day. It was very frustrating. Breakouts were failing. It had no staying power. You might see an index getting close above the 50-day moving average, and it would get close to it, sniff it, and move back, or it would get above it and not be able to stay. So moving above key moving average lines like the 21 EMA, the 50-day moving average, and now the 200-day moving average. So if I share my screen, I'll tell you exactly what I'm looking at right now.
Yep. And you were also saying while you're bringing that up that it was kind of promising that we've had maybe some bad news the past couple days, and the market has kind of opened weak and then closed strong. That's a little bit of a character change that you kind of pick up on. Maybe a change in environment is going on, but we'll have to see, of course.
All right, let me share it here for you. And that's exactly right. I mean, what's really been a good change is that for the first time, really, since I'll say since last January, a year ago, and maybe we had some of this in late July, early August, where there'd be some sort of news that came out that was negative news,
Mm-hmm.
and the market would hold on and maybe go up. And that happened a little bit in July and really not since last January, February. Now it's finally happening. We're getting missed earnings by Microsoft. Microsoft opens lower and then comes back. The market opened much lower yesterday when Microsoft announced bad earnings. I think I saw the NASDAQ down 150 to 200 points. And then by the end of the day, much of that loss was erased. And then here you go today, and the NASDAQ's up 1 point shy of 200. Tesla announced last night that their sales were a little bit less than the market had hoped for, and profit margins were going to weaken in the future because they lowered prices, and Tesla went up.
Wrapped up, yeah.
And then the market opened high today, erased all the gains, and then came back and went to a new high. We have not been acting like that at all. I mean, the last 4 or 5 months, anytime we get a big gain and then some bad news or something, it would wipe it out. Like can you see my mouse moving?
Yep, I can.
Okay. Really, when we started to rally in this, the market bottomed on June 16th, and then we started to go up. This is a 10-day moving average line in green. In the fuchsia there, we have a 21 EMA. We got above those lines and came back, and it was choppy. We sniffed the 50-day moving average, got pushed back, then we went above it, and the market rallied, but it never got to the 200-day moving average. And then once it started to fall, it just fell apart. You see, down days, big gaps, big down days. I mean, like you rally for 3 days and you take it all away in one day and even more. And we just couldn't get any traction. And it just kept acting like that. I mean, if you looked at the individual bars, you see many times closing near the lows, well off the highs. If we'd have a day here, like way back in mid-December, where the market gaps up, reaches a high here, and then by the end of the day, it's given all back, and you have these big, long, high tails on the top. And now it's changed. I mean, what's nice is you've got 3 occurrences of trying to get below around this level that we had that low way back in October 13th. It approached it again. It didn't quite go below it. We approached it again here in December near the end of the year, and it couldn't cut below. And since then, the market keeps going up. It was really key to me on the 6th of January this year, the first day of the year, when we started lower and then we took off, and it's like this level here finally became support that appears to be holding. As of today, we look like we're in a good rally, and for the first time, really, since way back here in January 14th, so just slightly over a year ago, the market is finally, in the NASDAQ, hitting the 200-day moving average. Maybe all bets are off tomorrow, and everyone realizes, hey, we hit the 200 days, sell, and we'll see what happens. So it's at a key level.
Yeah.
I like seeing the big blue bars. Blue bars are volume on days when it's up, and red bars are volume on days when it's down. And notice how the blue bars are bigger than the red bars. Then look at this, starting here in this year, it's finally happening. We're finally getting more volume on days that are up than days that are down. We got above the 50-day moving average here. We came back, went below it for one day, and rocketed past up. It feels like you're trying to push a beach ball below the water, and it just popped right back up. That was not happening over here. The beach ball would hit push below and stay down. And so the change in character. We're getting good volume on up days. We're reaching above key moving averages. Stocks that have bad news don't just plummet. They fall maybe and come back. The indices open lower and they come back. It just feels like there's more support.
Yeah. And in terms of, potential market leadership and also, just overall setups, how do you kind of view that qualitative factor? What's going on under the hood? Because obviously the indexes can be a little bit misleading because, the mega caps have such a big weight. But what are your kind of thoughts on, potential leadership and, actual stocks that we can trade?
And that's a great point. It's what I'm finding is you're getting more and more industry groups that are starting to have better acting stocks. If you went back a month or two ago, you might see a few medical, might see a few biotechs, some regional banks, nothing tech. Home builders were looking okay, and oil and gas and some miners and things like that looked okay. But now I'm starting to see some bigger name tech stocks. They don't have great patterns yet, but at least they're going up. You look finally. Let's pull up a few stocks here. I'm gonna see if I can change screens here a little bit. And you know what? I'll just pull it up on the same one. You could ignore the little histogram thing in the bottom when I pull up a stock. But if you look at, let's say, Google, notice how it's finally above its 50-day moving average. It tried to come back to it, kissed it, and went on. So you got the biggest high-tech, biggest cap stocks in the market, Apple, finally above the 50-day moving average. These were below their 50 days for so long. There's Microsoft, just today got above its 50-day moving average. Let's look at Amazon. So I'm seeing, for the first time in a long time, these stocks have been beaten down. And they've been down 50 to 70%. They're coming up off their bottoms and getting above their 50-day moving averages. And you go back and see how rare that is for like the last year. But if we go to like leading groups, things that have been doing well for a while, let's say Exxon Oil and Gas. That's a stock that had a good run despite a bad year last year. And it's doing better now. Chinese stocks are coming up. Pinduoduo, well off its bottom. They bottomed many months ago, breaking out. Baidu's another one. So there's some, bottomed way back. They bottomed way before our markets did. Like they bottomed in October. And then we'll look at Alibaba. So it's just things are starting to just look better in general. Let me pull up even some chip stocks in the U.S. Nvidia,
Hmm.
terrible year last year. Look at that. Look at that downtrend. I mean, just you went from 340, it's cut down to 100 and let's just call it 110.
Yep.
And you lose two-thirds of the value, but finally it's above its 50, it's above its 200 and starting to make some gains. So I'm watching just a lot of stocks. They're not in great patterns yet, but they're just looking so much better than they have for months.
Yeah, perfect. And did you want to mention kind of that other way that you use to determine the trend in the general market, the histogram as well? I think that'd be really cool for people to see.
Um, I'm part of a meetup, the Pilot Investors Group meetup, and one of our members many years ago shared with us a method. His name was Brian Martz, and he came up with a way of tracking the short-term trend of the market, or maybe medium-term trend, I should call it, to be fair. Um, his name is Brian Martz. We call it the Martz Market Trend System, and it's based on a couple moving averages. And I showed the color of the market in this histogram at the bottom. Green is the time you can invest. Red is the time you should not be invested, and yellow is kind of in between. And you can see most of last year, starting in January, look at all the red for most of the year. If you just squint, you can see that without even looking at it, it was red most of the year. And yes, there were some uptrends here and there, but even some of the green uptrends were short term, not really good money making opportunities. It went green, right over here in this day. Looks like on January 10th, and it's been staying green. And it really looks at the slopes of the 10-day moving average, which is the green line here, and it looks at the slope of the fuchsia line, the 21 EMA. And when they're both sloping up, and you're up more than 1% above the 21 EMA, you've got a green trend. And if they're both sloping down and you're more than 1% below the 21 EMA, then you're in the red. And I won't get into too much of the details about how do you get yellow, but it's really a key way of just watching the general trend. And when all three signals have to be present to go green, all three have to be present to go red. And in between, if there's one up and one down, you don't change the color. You just kind of sit there and wait. But it basically is a nice way of looking at the trend of the market um, in a simple way that doesn't involve volume.
Yeah, perfect. And just taking a step back in 2022, could you kind of talk about how you traded and also kind of how you protected yourself during, the drawdown in the market and especially in the drawdown in many of the high flying software tech names that had been, super strong during 2020, 2021, but, suffered really strong declines, really some strong devastation.
Yeah, when you go into like January, February of last year, the overall markets were still above their 50-day moving average. When we got this day here way back in January 5th, that's when I first started to lighten up some positions. I will admit I got sucked back in thinking, oh, maybe it's not over yet. And then it was pretty obvious that as we got to the end of January, early February, that it was a bad time in the markets. And my individual stocks weren't acting well, and I was getting out. I will also admit I traded way too much last year on bounces and tried to get back in. I have a friend who pretty much stayed out of the market after that, which I had done that. I took a bigger drawdown than I wanted to because I kept trying these little rallies. And although the market may have done better, my individual stocks did worse than these. And finally, when I got cured of even trying anything of really as we got near August here, and I pretty much stayed out of everything. I was nibbling here and there and taking some small cuts, but really from September on, I was hardly in the market at all. I would try things to test the waters, but it was just a time to just really not do much.
Yeah.
But if your individual stocks aren't doing well and the overall market isn't doing well, it's just the time to get out.
Yeah. And is that kind of your advice for people during bear markets? Less is more, try to trade as low as possible.
Yeah, I mean, if you're going to try anything, it's much smaller positions than normal, and you just ready to exit. There's no reason to hang on for anything beyond a 3 to 5% loss, especially in a bear market. Just forget it.
Yeah, perfect. And this is one of my favorite questions to ask different traders. I'd love to hear about kind of your weekly and also daily routines that kind of that you do, on a consistent basis to kind of set yourself up, get a sense of where the market's at, what are the potential leading groups, and also, what are the top stocks that might be worth trading, or watching for a pullback if it does come and sets up again. So yeah, I'd love to just kind of hear about your overall routines that set you up for success.
Okay, I do a variety of things. I have a couple things I just always do no matter what. One is when I'm in stocks, I excuse me, and during earnings season like we are now, I know when their earnings dates are when the earnings are going to be announced. I missed
Yeah.
one early in my career, and that was a mistake. Um, I look at different websites. I look at the Nasdaq website. They have a listing of when earnings are going to be announced by day. I also look at Yahoo, and they have you can look at what earnings are going to be announced every day, and I scan the list. And the Nasdaq one is great because they do it by market cap, the largest market cap on top. And I look at stocks that maybe are leaders in their industry, or maybe market moving stocks that they like to talk about. But especially, I look for my stocks or the ones that are on my watch list, and I write those down. And it's a really high tech approach. I write them down in a book, right,
Hmm.
by hand, so uh, I know exactly when they're going to be announcing their earnings, and before hours or after hours. So that's something I do all the time. You have to do that. You can't go be blindsided. The second thing I do is on the weekends with Kurt and I, and we do a meetup, and I always look at the S&P sectors, and I track which sectors have what would be a similar to the March market trend system, whether it's in a green or red or a yellow, and I notice how many of those sectors are in the green versus red, and it gives you kind of a scorecard
Right.
of how the market's doing underneath. I look at the market indices on the weekend, and I always look at leading stocks. I run screens, and I try to find stocks that trade over $20 million a day, that have good fundamentals in relative strength, good fundamentals in earnings and in sales, and I have my favorite industry groups, and I look to see how those are doing. And you got to keep track. And I have a watch list that's always, like, I have it in the background now, and those leaders are always there. And I've got them color coded so I know what's up for the day, what's down for the day, and where they're at relative to the day versus the range for the day. I have a with TradeStation, I wrote a little program that says, like, like, in the range for the day, are you like near the bottom? Are you like in the 10 to 20% of the range of the day? Are you in the middle, like 50%? Or are you near the top, 80 to 90%?
Right.
And with this long list, I can tell by looking at it, if a lot of stocks are down for the day and they're way low in the range, I know where the market's at, not only for the day, but how it's acting. This morning, the market was down, and within a few minutes, I could see a lot of red for changes from the open, but I'm sorry, a lot of red for changes from yesterday's close, a lot of green from change from the open. So I could tell that the market was, even though it was down, there was strength already within the first few minutes, that
Right.
things were starting to bounce, and so I always watch leading groups, leading industry groups using MarketSmith, and sectors, how they're acting. And so I check on the weekends the sectors and groups. Daily, I check stocks, and I'm always looking at my stocks every day on their charts. Um, and I'm up before the market opens. I'm at my desk before the bell rings. I'm ready to go. You have everything loaded up. I don't want to be blindsided.
Yeah. And just going back to what you said, I do the same thing. I love sorting by, I call it the daily closing range, where stock is within its daily range. Especially when, the market's gapping down, or just on the day it's down 1%, 2%, or whatever. Looking at those stocks that have a 70% range when the market has a 10% range, those kind of stand out. And if you see that over and over again, that's a sign of relative strength for me. So yeah, I think that's a great way to sort your watch list and try to find that relative strength.
And I guess the last piece of advice, part of a routine, is you have to have friends who invest like you, or similar enough that you share enough ideas that you help each other. The co-authors of the book, we meet all the time through Zoom or whatever. And then we have a group that meets every Monday, other hedge fund managers and we talk about, what do you see in the market? What are your favorite stocks? What are the groups? How are they acting? How are you doing? And we kind of keep each other honest about, following the rules or not. Are you, and you when you're trading alone, you've got to have like a core group of people you keep in touch with, so that if your thinking is on track, you don't want to see yourself way off track with everyone else. If you're on your own, you don't know if you're off track. But if you're talking with others who are like-minded in the way they trade, you can kind of see like, well, I guess I'm on track with you guys. And if not, then you can talk about it. Like, what do you see that they don't see? And maybe you can convince them, or vice versa, they convince you. You have to have peers that you can talk to.
Yeah, it's good to have a support system as well.
Exactly.
Yeah. Perfect. And Eric, I wanted to ask you, what are kind of your favorite setups to use when trading stocks? What's kind of your top 3, top 5 setups that you use to start a position in a promising IPO or just more mature stock as well?
Let's talk mature stocks first. My favorite is the cup and handle and flat bases. I want to see a stock emerge from a 5 to 7 week consolidation and breakout in heavy volume. Cup and handles are great. In a market like this, when we've had a big downturns, I mean, we're talking like some stocks are down 50, 70. I've seen stocks down 80 to 90%. I want to see the stocks when they're that low off their highs. I want to see at least off the bottom, at least a 30% prior uptrend, and then some sort of consolidation. Maybe it's a cup and handle. Maybe it's up and sideways for a while. But I want to see on a bottoming base at least a 30% uptrend, and then I want to see it moving up and coming out and continuing to advance. And then for IPOs, I love to see a stock that already had an IPO advance, finish the long due diligence phase, and then it's at least 30% off the bottom of the due diligence phase, let's say, and then form some sort of consolidation and it gets ready to break out. Those are my favorite. The IPOs, especially because they tend to be the ones that early in their life cycle, they might have already had a good advance and a correction. And then when they get to that mature phase, when they're past the due diligence and you get that first mature base, that's to me, that's the way to go.
Yeah, and I mean 2020 was kind of the year of that, right? So many of the true market leaders from that year, Zoom, Crowd, Fiverr, Livongo, Peloton, Fastly as well. Those were all ones that had a nice initial run, nice long due diligence phase, and then on earnings or news or just the price action itself, burst out and made really fantastic runs. I think those are great examples. Yeah, and going back to your entries, how far do you typically set your stops from an entry? What would cause you to exit a stock if it doesn't do what you expect and break out of the consolidation?
Well, for a recent IPO, I would say a 10% stop loss. That's where I put my stop at.
On a smaller position size than normal, right?
At smaller, I would at least I'd only go like half the normal size. And then in a year like last year, if I was trying any IPOs, they'd be even smaller than that. It was such a bad year for stocks in general and IPOs. But if I were to, if I were to get a winner and I'm not looking at a loss and it's going up, if it's getting near the top of like the turbulence zone or something like that, I'll probably sell a third, maybe even a half, depending on how the stock is acting when it gets to the top of the turbulence zone. And if it gets beyond the turbulence zone and it's already past the due diligence phase, now I'm looking at climactic type action. Has it doubled in less than 3 weeks or something like that? I might sell some on offense, but typically I'm looking more for defense. Once I get past the turbulence zone and I'm in past due diligence, I'm looking for, does the stock break the 50-day moving average? Maybe sell some there on that kind of a defense. or just some unusual action. You don't want to see a stock like breakout, continue to go, and then have some monster down day. Something unusually bad that might make me sell.
Yeah. And how long do you typically hold winners as well as losers? I'd be curious on that as well. And do you have, I don't know if you keep track of this, but do you have a sense of your average gain and average loss as well? So those would be pretty interesting stats.
Yeah, I end up selling. I'll answer the duration first. The losers end up being pretty short duration. You typically end up with maybe buying a stock, and if you're going to take a 3 to 5% loss when the market's good, you typically find those out quickly,
Yeah.
and so the losses end up being short duration. Gains, depending on the stock itself, I target to try to get months. I want to get months out of the stock. Typically, I'm hoping for like you'll find using whatever kind of market trend system you use, you typically get 60 to 70, maybe 80 trading days before the market starts to downturn. So you're looking at 3 months, maybe 2-3 months, and I might be selling some of a stock, or I might start to hedge so I can hold for longer gains. When you look at like 2021, 2020 and 2021, I had Nvidia and Tesla for a long time. I got long-term capital gains out of those, so I held for over a year. Other stocks, maybe I would hold them for 3-4 months, something like that, depending on how I'm doing in the stock, how it acts after earnings, things like that. And I typically hedge with options around earnings dates. If I'm in a stock for 2-3 months, it's probably gone through at least one earnings cycle. And
Mhm.
when it gets near earnings, depending on how much cushion I have in the stock, I will hedge. I'll buy put options to protect me against a big gap down.
Yeah. And then do you have a sense of your average loss and average gain as well? Obviously, your average loss is probably right around that typical 3 to 5%
Yeah,
loss. Yeah.
3 to 5% is for the gain. I can't tell you because I haven't calculated that in a while. It's an odd thing too, because if you hold 3 stocks for over a year and you get a big gain on those, and then you hold a bunch of other stocks for a shorter time and take smaller gains, do you want to average it by the total capital, or do you want to average it by the numbers of trades?
Right.
So you can, it's easy to say, well, okay, you took 7 or 8 trades that maybe 5 to 15% gains, and then you had 3 that each went up more than 100%. Do you average by the numbers of trades, or do you average by the total capital you gain? So I don't really calculate it very much, but I would say in general, once I start to get near 20 to 25%, I'm probably starting to sell something.
Yeah.
I'm going to take a little bit of gains on most of them, unless in my mind that's a supermarket leader, and then I'll say, okay, I'm going to hold on to all of it for a while.
Yeah. And do you find that most of your profits, in a good year come from, one or two or to three stocks, and then the rest are kind of, it kind of cancels out with all the losers?
But that's been my history. You end up with 1 or 2 big winners, a couple that also are good winners, and then the rest all cancel. The rest are small winners and losers that cancel each other out. I think I've looked in the past, and I had one year in 2009, I had a big year, and when I added up everything I made, it was like one stock accounted for like 80% of the gains, and another 2 stocks accounted for like 20, maybe 30%, and then the rest accounted for 10% of losses that canceled it all out.
Yeah. And I'd be curious to hear about what your kind of typical position size is, and also how you set that, whether it's consistent each time, or is it kind of based on your conviction in a particular stock or setup?
I'm more consistent with each. I never know which one's going to be the winner, so I
Mhm.
start with the same size position all the time. Now with the market just turning, I'm going smaller. But let's say you're out of a bear market and you're looking at just a normal market. I might start off with a 10% of my portfolio in a stock, and then I'll, depending on if it goes up 2 to 3%, I'll add some more. And then if it goes up another 2-3%, I'll add again, and I will get to, let's say, 20%.
Hmm.
So 20% of my portfolio was a typical position size. Maybe there's one stock in the portfolio, let's say like way back in the day, Baidu did really great for me. I might get to 25 to 30%. Tesla last year or 2 years ago, same kind of a thing. But so I try to start with a 10% position size and build to a 20%. A market like this, I probably was starting off with, I have some stocks now, maybe a 3 to 5% position size. I think my biggest position now is about 8%. So I've been starting smaller.
Yep, perfect. And I'd also love to hear what you think about this. How much of your process would you say is technical focus, looking at the chart, looking at what that's telling you, versus the fundamental side of things, the earnings, the sales, hearing more about the story, and also kind of what the groups are doing as well, the overall theme. So I'd love to hear kind of how much of your process is technical versus fundamental based.
Um, First, the stocks have to meet a fundamental hurdle. If it doesn't have good earnings growth and good sales growth, I'm not even going to see it.
Hmm.
I'll modify that by saying there's a few times, like right after a stock IPOs, there's some IPOs that don't have good earnings yet; they're negative. So in those cases, then I'll see it because it's an IPO. But most of the time, it's got to have good earnings and good sales growth. If it doesn't have that, I don't even look at the technicals. I also look to see what institutional support it has. I
Hmm.
want to look at the number of funds. Is it growing? And I use MarketSubmit, so I get to look at which funds they target as like the type of funds Liam O'Neill would say you should study. And I want to see a good fund or two in that. So I want to see good earnings growth, good sales growth, and I want to see funds in it, and the funds are growing. Then I look at the technicals. And then once it's on my radar, I'm pretty much just looking at technicals.
Hmm.
Week to week, day to day, I'm just really looking at the charts. How's it acting around moving averages? How's it acting in volume? Is it advancing in good volume? Is it advancing in weak volume? Where is it looking how's it moving around support or resistance? But if it doesn't have the fundamentals, I don't even look at it. So once it meets the hurdle of fundamentals, then I'm pretty much technicals after that.
Yeah, interesting. And how deep do you kind of dive into the story behind, what's producing the earnings and sales growth? How much do you look into what the company does, and can you kind of, think
The
about the
longer I own
themes?
it, the more I look into it. There have been
Yeah.
times where I will freely admit it meets the numbers in terms of fundamentals. It's got a good technical chart. I buy the stock, and then I go find out what they do.
Hmm.
Um, there's less and less of that lately because there just haven't been too many acting well. But 2021, there was a fair number of IPOs. I will freely admit I did not know much about the company at all, but it already had the sales and earnings, and it was acting well. And I'd be in, and then I have to, backtrack and find, okay, now what do they do? How
Yeah.
do what's their market? Who's their competition? That kind of stuff. But
Yeah.
many of the companies I invest in, they're big names. I mean, we know what Tesla does. I know what Nvidia does. I know what Apple does. You
Right.
don't have to depend too much on those stories. But
Yeah, perfect. And I want to ask you kind of what stocks you're currently looking at right now or trading even, and kind of your thoughts on that. So maybe we can share the chart again, and take a look at a few of those names.
okay, so here's a stock I'm watching right now and actually have a position in. It's Tesla. Tesla had, and on the right is a weekly chart. You notice Tesla was way up around over $400 a share. It came all the way down. It almost got to 100. I remember watching it that day. I think it got down to 102. And I saw it bounce rapidly. And here it is over here on that day on the daily chart. It hit a low. I thought, oh, it's going to hit 100, and it didn't. And it rocketed up pretty nicely and didn't look back. The next day it gapped up, and then it kind of chopped around for a week and then gapped up again. I think I might have bought some that day because the way it was acting. And certainly when it got above the 21 EMA, it opened up really high there, but then really got smashed that day. I think not only did I add on that day, I think I sold some of that ad right after that because I thought, oh, it's breaking down, it's not working. And then it quickly turned around again. I bought some more and I held on through earnings. And what I've noticed about Tesla, even though this is not the type of pattern I normally buy, because it's been in a downtrend for so long, it was just the volume on that day, how it acted when it didn't get down to 100. And then when it got above the 21 EMA, it was like a small pilot position. And it's just seemed to feel differently. I mean, if you look at this daily chart, it was down like every day for almost 3 weeks. And this was a big change in character. It seemed like for whatever reason, Elon Musk would talk about Twitter, the stock would go down. He'd talk about Tesla, the stock would go down. It was going down every day. And it just feels different now. And I was like, the market had changed. We had a follow through day on IBD. My market trend system turned green. And it's like, okay, I want to buy stocks breaking out to new highs, but here's this stock Tesla that I've had good success in the past that really seems to be acting differently. And I track this versus other stocks. Let's look at some other stocks like in an industry that's acting well. Let's pull up Toll Brothers Housing. Housing stocks have been doing well. And you can see that they've been in an uptrend for longer than certainly Tesla. And I started buying a small position in Toll Brothers, and then it had a terrible, this big gap up day followed by open here and went down even further, and I sold it. And sure enough, it came back without me. But I was watching Toll Brothers, Freeport McMoran. It's a miner. It's been in an uptrend for a while. It's been choppy lately. If you compare that to Tesla, like look at these last 3 weeks, Freeport McMoran versus Tesla. And what has Tesla done for 3 weeks? Straight up. What's Freeport McMoran doing? Chopping. So I'm trying to gauge what kind of stocks are moving or continuing to move. Let's look at another stock that I've been trying to trade. I'm not a big fan of oil and gas, despite the fact that I actually worked for this company for many years, a long time ago. This is BP. They bought out Amoco. I used to work at Amoco. It really hasn't gone much. This is the high in December. Finally, today, it broke above it. So it formed a consolidation and choppy, but came out. I'm watching solar stocks. Enphase was the leader. It's had a terrible time. It reached a high in early December, and look where it's at now, way below the 200-day. Not a stock you should be watching anymore because First Solar looks so much better. Okay, so here's First Solar. It's acting more like the leader in solar energy stocks. It too had a peak in December, like Enphase. It had a correction, but look at how it's come back and bounced so nicely. It's chopping a little bit now after this like 4 or 5 day rise, but it's acting much better than Enphase. So this would be what I'd be watching instead. Some other stocks. This was a relatively recent IPO. ELF. You can see on a weekly chart, it's come a long way since April of 20. It had a big correction last year, but one of the few stocks that actually broke out and then took off, and it just kept going. I don't have a position in this, but I'm watching it. It had a terrible 3-day correction starting in January 9th, and then look how it's come back very strong. So this is like the way the market's acting now. It's like even stocks that have corrections are coming back quickly, and ExxonMobil is one I'm watching. Look at that, broke out. I would say there's a cup with a handle, broke out. I did buy some today, so that's a live trade for me. Cup and handle breakout, bought today. STLD, Steel Dynamics. Look at that. I bought some of that today. These are the kind of patterns you like to see that have not worked for a long time that are finally seem to be working. But believe me, tomorrow, if this stock reverses all of that gain, I'll be out because that's at a break out of a cup and handle. It should not do that. But if it comes down a little bit, I'm going to hold.
And in the solar space, are you watching ARRY at all, ARRY?
I am. I have not bitten I have not bought this one myself. Here's why. It's a recent IPO, had a nice IPO advance, came down, undercut the IPO day one low by a lot,
Hmm.
formed a bottom. And to me, you're off 30% off the bottom. Okay. It's forming a base, tried to break out, failed, tried to break out again, failed. If it can break out above this area here, get above this high, get above this high, I expect a little turbulence zone here.
Hmm.
But if it can get above this right there, I would probably buy it. So I'm watching it, but I'm not in it yet. And if it does get above that, I would probably buy some, but I would expect problems in this, somewhere in between here, this turbulence zone. I'd expect the stock to have a reaction where it maybe consolidates. I am watching it.
And when you're establishing a position, you kind of talked about buying in pieces a little bit, at least right now, where as it continues to work for you, you add a little bit more. Is that your typical process, during a normal uptrend, or is that just kind of for the current environment?
That's typical for a normal uptrend. Was not typical for any time since July. I was not doing any add-on buys because it was not a normal uptrend. It was a bad market.
Yeah.
Add-on buys were being punished, but I'm trying it again now because the market's acting better. And if add-on buys wouldn't work, that's a clue to me that it's not a good market yet. But
Yeah.
add-on buys are starting to work again. And so to me, that's a good sign. I bought a little Tesla, then add a little bit more, add a little bit more. I'm holding right there. The same thing with I bought Nvidia, and again, not a typical pattern, but you're off 30% off the bottom. You're forming some sort of cup, and then it started to break out. And I
Hmm.
mean, because look at this, you're still near the lower third of a bad downtrend. Normally, I wouldn't be buying this at all, but after a bad market period, sometimes the new leaders or old leaders come back and do better than new leaders. And but yeah, so this would be the one where I tried an add-on buy here and it didn't work. Exited the add-on and then added it again, and it's working. So
Hmm.
we'll have to see.
And other than Airy, are there any other kind of recent IPOs that you've got your eye on? Maybe they're not ready yet, but you're watching the overall patterns.
I am. I've been watching this one for a long time. Driven. They own Mako and a couple other brands. It IPO'd. It's been relatively choppy. To me, it's just in a long due diligence phase. It's near the bottom. It doesn't look good yet, but if it starts to get near, these old highs, I'll be watching that. What are some of my other favorite IPOs? Oh, Airbnb. This is one that just has been having so much trouble. I had an IPO advance that didn't last very long, heavy correction, another attempt, and then terrible correction. And it's been down and out for a long time. But when I look at like Marriott doing pretty well, right? And it seems like hotel stocks are doing well. Let's look at Hyatt. I think that's, or Hilton. Let's see, that's Hyatt, I think. Yep, that's Hyatt. Breaking out to new highs. Let's look at Hilton. Also breaking out of like a correction off the bottom. So I'm watching Airbnb as a potential. We'll see what happens. Like Array, it's not ready yet, in my opinion. So that's another IPO I'm watching.
And are you watching MBLY Mobileye at all, or it
I
has to be?
am.
Yeah,
I probably should have mentioned that one.
yeah,
I actually have a small option position in this one. It's been choppy. The weekly, you have to expand a little more to even see it. But look at the daily.
yeah.
Um, it's higher than its IPO day one price close. It did undercut already. It had a pretty good advance, although choppy. These are, I forget what the percent range is per day, but it's like 5% a day. And it's been all over the place. And one way to help me at least stomach that was instead of buying the stock, I bought some calls. And I still have a couple weeks before expiration on the calls. And if it's in the money, I'll probably exercise them. But I'm watching it. I don't like its volatility.
Yeah.
I
And
think it announced earnings this morning.
yeah.
So yeah, it did. And it had a nice reaction, went to an all-time high, and then look where it closed. It closed right there. So it couldn't hold the gains. That's typically not a good sign. It doesn't mean it's a terrible sign, but I don't like it.
Yeah. And just for anybody, we mentioned kind of dollar volume before. If you don't know how to calculate that, you just kind of take the share price and multiply it by, the average volume, whatever you prefer. And that gives you kind of a sense of how liquid a stock is.
Exactly. And in this case, for Mobileye, I have to move a little bit to read the number because my screen's blocking it. Sorry about that, gang.
Yeah, no worries.
But it looks like it's trading. What is that number?
Around 2 million. Yeah.
Around 2 million a day,
Yeah.
and the share price is 36. So it's trading $72 million of volume a day. It meets that $20 million criteria by a lot.
Yeah. But you're right about the character. It like never closes on its high. It's got a lot of tails on the candles and all that.
I don't know what the average true range is, but
Yeah.
it's hefty.
Yep.
You know,
Yep. And is this something? And there's actually a question I want to ask you. Are you more interested in trading the IPO advance phase, or after it's gone through the longer term basing process, and starts a institutional due diligence phase?
I'm better at trading a stock in the institutional advance phase. Um, After it's gone through its IPO advance and due diligence, and then starts its long-term IPO advances. I'm better there. And why? I'm not as quick at the trigger in the IPO advance phase. Sometimes you have to be like let's look at Mobileye here for a second.
Hmm.
Let's see, that's day 1, 2, 3, 4, 5. It's probably like about day 10 where it pokes above the high that it had on day 1, and that would be considered a potential buy. I'm not necessarily watching IPOs so closely that I see them in day 4 or 5 or even 10. I'm watching them, you know, especially when the market was bad like this. This is, you're looking at what time frame? That was like December or something like that, or even October. And I just don't, in a bad market like that, I'm not watching it so closely that I'm going to see every IPO in a bad market. 2021, a better market, yeah, I'll see them. But I'm not. I'm my friend Eve. She's really good at spotting IPO advances. She's really good at getting in early.
Hmm.
Many times, like I said earlier, you have to have a friend that you can talk with, and she will text out like, "Hey, look at this! It's breaking out." And that's how I find out. She'll find out before I do, and then she'll tell me.
Yeah, perfect. And is there anything related to chart reading or trading setups that you think that we haven't covered yet that you think is worth mentioning to people watching?
um, I think you have to find a chart program that just pleases your eyes and seems to fit you, with the right color schemes, with the right moving averages, and then stick with it.
Hmm.
And you can modify here and there, but don't keep changing programs. Don't keep changing indicators. Find a few limited number of indicators and just stick with that, and just look at all charts in the same way all the time, so that you train your eyes.
Yeah. And you kind of you mentioned that you wanted to touch on this later. How long does it kind of take to get good at this and, gain enough experience that you can really execute while trading?
I've been asked many times by people who meet me, and they know I'm a full-time trader. I've been a full-time trader since 1999, and they wonder like, or they'll say something like, I want to be like you. I want to do what you do. I don't want to work for a company. I want to be on my own. I want to trade for a living." And the two things I say is, first, forget the idea of a steady income. There's nothing steady about income when you're a trader. You might have a year where you make more money than you ever could have imagined, but then soon after that, you might have a long period of time where you're not making any money, and in fact, you're losing money. And if you can, first, you have to be able to stomach that, but secondly, you have to just realize that's the way it is. Um, the other thing is, don't expect to be good fast. I mean, many people, they're good at whatever they do. They study engineering, or they study how to be a doctor, or they study how to be a lawyer. Yeah, it takes what, at least 4 years to get an engineering degree and 8 years to become a doctor, right? And a lawyer, you have your 4 years of undergrad followed by law school, so you're looking at 7, 8 years there. Um, why would trading be any different? Why would someone expect that? Gee, I was good at being an engineer, or I was good at being a doctor. Certainly, I can be a trader. I'm a smart person. Why would you think you could do that right away? Um, my advice to people is dedicate in your mind ideas that it's going to take you at least 4 years. It's no different than learning in any other profession. No one would expect that, gee, I'm really good at engineering. Now I know I can become a good woodworker and make furniture. You wouldn't think that, oh, I'm going to be an expert cook because I'm really good at being a lawyer. So why would anybody expect that they could become a trader without a lot of study, a lot of reading, and a lot of experience? It takes a good 4 years, and
Yeah.
so don't try to make big money fast. Try to stay in the game. Trade small, learn. When you start to get better, trade a little bit more. As you start to get like consistency with your trades, and if you learn, you're going to follow the rules. You don't get rattled in a bad market. You follow your rules in a bad market. You follow them in a good market. You don't get too euphoric. You don't get too down. Um, and it takes a long time. You've got to be through a whole market cycle. You got to expect at least 4 years.
Yeah, I think that's key. And you mentioned that it does take reading and study. Outside of the books that you've kind of already mentioned, what is kind of your list of traders should start here when doing their research? Darvis, Reminiscences, you mentioned. Are there any other like key influential books that helped you out immensely? And How to Make Money in Stocks,
Um,
of course.
yeah, How to Make Money in Stocks by Bill O'Neill. He has a couple other books too, that were earlier editions. Um, Nicholas Darvis, How I Made $2 Million in the Stock Market, Reminiscence of a Stock Operator, um, a couple by Elder. I'm trying to remember the names of them off the top of my head, but
Trading for a Living. Yeah.
Trading for a Living, that's it. And then Trading Psychology. There's a good book, a couple of books by Brent Steenbarger, um, Douglas on trading psychology. Um, you've got to be able to handle um, the ups and the downs, and learn how to do it. Well, I've got a whole stack over there, but you can easily find on doing a search like on Twitter or on Google, like what are the top 10 trading books, and you'll quickly find people's best ones. Weinstein's book on trading is good. Um, what was that my favorite? Oh yeah, the looking over here, Demark had a few good books on trading. Um, there's an endless supply, and find ones that just you can read and understand, and that just makes sense to you, and then
Yeah.
stay with those.
Yeah. And along those lines, are there any kind of key trading quotes that really stand out to you and that kind of resonate with you? Um, yeah, and just kind of what are kind of your favorite trading quotes?
Um, well, I guess the biggest one is that you know this one popped in my head. It's not my favorite, but it's one that popped in first. Um, you know, bears can make money, bulls can make money, but pigs get slaughtered. You got to be careful just in general. Don't try to get too much. But one of my most favorites is from Bill O'Neill, which is um, anyone can do it. If you work hard and you study, you can get good at this. Anyone can do it. Um, it's it is a profession that not everybody's cut out for. But um, if you are willing to work hard and study, anyone can do it.
Yeah, perfect. And I'll just stop your screen sharing here. For my last question, I always like to kind of open it up to you. What is kind of your general advice for traders to help them along their journey? And maybe it's relevant to this current time where we've been through a pretty exhausting, pretty destructive bear. We're maybe starting a new bull market. What kind of advice do you have for traders who are just kind of trying to turn that corner and really excel at this?
my best advice for traders who right now is be patient. This is looking like the beginning of a rally that's going to hold and continue to go, but we don't know. And so don't get too big. Don't try to make too much money too fast. If this is going to be a lasting rally, there's going to be plenty of time. You don't have to get the exact bottom and you don't have to get the exact top to get out. You can make a lot of money in between. Be patient and watch how the overall stock market is doing. Watch individual stocks. Watch how the market reacts to bad news. Watch how it reacts to good news. Watch how stocks react to bad news. Watch how stocks act to good news. The more they act better, the more confident you can get. The more broadening of the breadth of the rally, the more industry groups that start to act better, the better off we are. There's no reason or rhyme to try to rush in fast and make money quickly. My best advice is don't try to grow rich quickly. It's okay to grow rich slowly. It's better off. You're easier. You take less chances. It's more guaranteed if you try to grow slowly versus if you try to get rich quickly.
Yeah, perfect. Well, Eric, thank you so much for your time. I really enjoyed this, and I'm looking forward to learning even more from you during the IPO masterclass. So once again, if everybody's interested, click the link down below in the description. But thanks so much again for your time and for sharing your knowledge. And where can people find out more about you and learn more about you and your system?
Probably the best way would be to through your webinar, through the seminar we're doing together. I don't have a website, but I do appear on Twitter and I do appear on IBD Live. And in fact, I'll be on there tomorrow. But by the time people see this, it'll be over. But I'd say if just follow me on Twitter, and that's probably the best way.
Yep, and I'd recommend to everybody pick up this book. It's very excellent. So thanks again, Eric, and to everybody watching. I hope you enjoyed. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And we'll see you guys in future videos. Take care.